Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, March 18th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES, bouncing in overnight and pre-market trading here after Friday's decline. We had a 2-day pullback here, but bouncing off the 8-period PIMA here. You have the rising PIMA trigger zone that continues to be in play, and today bouncing back already heading into the RTH Open. This is the bounce here ahead of this week's FOMC meetings. We have a 2-day FOMC meeting here with Wednesday's FOMC statement and rate decision. We also have the press conference that follows. All eyes are going to be on that later on this week for the market. Until then, we could be looking at range-bound action for the most part here heading into Wednesday's event, followed by a Wednesday through Friday increase of volatility. Still an upward bias right now. Despite the 2-day pullback, that's about as much as we've been able to get, a 1 to 2-day pullback, and each and every time we seem to bounce right back. At the moment, the ES is still trading within a range here that's developed at these highs, 51.75 up to about 52.20, 52.50 rather. And that zone right there has been in play for the last 5 to 6 days. Still an upward bias, holding above the previous highs here, and the potential here is still to continue to climb until proven otherwise. Until this market can really fail at a prior pivot low, extend selling pressure for a broader pullback, but we just haven't seen that type of price action yet, and we may not until we head into the next quarter. So right now, still seeing quite a bit of strength, bullish uptrending price action, and right now very strong pre-market response here as we head into the RTH Open. We could continue to see overall strength until proven otherwise, but for the most part, staying inside the range here with an upward bias ahead of Wednesday's Fed. We take a look here at the NQ. Similar price action out of the NQ. This one's showing a little bit less bullish eagerness here. We are seeing quite a bit of overnight and pre-market strength out of the NQ as well, but this one has kind of been mostly range bound, sitting on top of itself. Still an upward trend, but the trend has dissipated just a little bit, still respecting the bullish PIMA trigger zone. And again, heading into Wednesday's Fed, we could remain mostly within range. So that 18K level here could continue to be support. The upper level 18.5 could continue to be resistance as this thing trades within this range ahead of Wednesday's Fed. So a bullish upside bias, but range bound ahead of Fed. If we take a look here at crude oil, crude here got a bullish breakout Thursday, held those gains in Friday with a very narrow range day. And the idea was today could be a high range breakout session. The early idea was for a look at the previous session's lows for an outside day up and continuation, but the first test has been at the previous session's high. We've seen a triple top type of reaction at that high, 3 moves above the previous session's highs and 3 rejections, and we're now back to the 81s where it closed Friday. If this is a failed new high, we could be looking at an outside day down, even briefly, as this market retraces back toward 80 and perhaps into about the 79-80 zone. So right now, still bullish overall. Very bullish that it finally was able to close above 80, but not seeing much in the way of a continuation at this time. We could be looking at an outside day down that takes us back toward 80 or just below, and then bulls need to keep that area bid for a continuation out of this range. Taking a look here at gold futures. Gold right now continues to hold above the 2150 level. As a matter of fact, today, right now, is the first time that we've actually seen price retest the 2150 level after pushing through a couple of weeks back. The market tested this area late last night and early this morning. 2150 had held at that level, built a little bit of a box below the 2152s, and is now pushing back up. So this failed new low right now could lead prices back up the range I mentioned before that this is a 50-point range from 2150 to 2200. A failure at 2150 here would open up a move down into 2100 for the next 50-point range below, and then below that you have down to about 2040. So those are the 50-point ranges right now. We had very big time push through those three ranges right there, and now backfilling into the top one. Bulls want to keep this area bid for a continuation higher out of the key range. A failure here at some point down the road could open up a return to 2150. From a short-term perspective right now, a nice bullish response here off the 2150s could continue to extend prices into the previous session's midpoint, 2167.80, with a shot to continue higher within the range. Lastly, taking a look here at the YM. YM about a quarter, up about a quarter of 1% here at the moment. This one has also seen a steady continuation to the upside. Nice bullish trending market. We did get a little overextended here and suggested that a bit of a pullback could be ahead. We got our 2-day pullback, and this thing pulled right back into the bullish Pima trigger zone and is seeing a bullish response at the moment. So early strength here today. And again, this market trading within 39 to about that 39.7 zone here with an upward bias, and that could be the range here as we head into Wednesday's FOMC statement and rate decision. Expect a bit of more compression as we head into that event, and then following that event we could see an increase of volatility heading into the end of the week, followed by volatility over the next couple of weeks. So right now very bullish overall. Not quite as bullish as the ES and the NQ. Really needs to get through the previous session's midpoint in order for further strength to be seen here. 39,237 here is that level. Pushing through that level would open up some upside here within this 5-6 day developing range. All right, that is it for now. We'll see how this develops here heading into Fed week. Have a fantastic rest of your session. I'll see you in the trading room. Take care.